Hello and welcome to this video on Warren Buffett's investing strategy. Warren Buffett is widely considered one of the most successful investors in history, with a net worth of over $100 billion. He is one of the most successful investors of all time, known for his disciplined approach to value investing and his ability to consistently outperform the market. In this video, we'll take a closer look at some of the key stocks in Buffett's portfolio and explore his investment philosophy. Warren Buffett was born on August 30, 1930, in Omaha, Nebraska. He was the second of three children and showed an early interest in business and investing. As a child, he would often spend time reading financial publications and poring over stock tables in the newspaper. Buffett started his first business at the age of 11, delivering newspapers, and by the age of 13, he had filed his first tax return, claiming his bike as a $35 deduction. Warren Buffett was rejected from Harvard Business School after an interviewer deemed him inadequate, saying, "Forget it. You're not going to Harvard." He went on to attend the University of Nebraska, where he graduated with a degree in business. After college, Buffett worked briefly as a stockbroker, but he was not satisfied with the sales-driven culture of the industry. He eventually went on to work for the legendary investor Benjamin Graham, who became his mentor and taught him the value investing philosophy that would shape his investment style for the rest of his career. Warren Buffett's early success can be attributed to his dedication to value investing, a philosophy he learned from his mentor, Benjamin Graham. In 1956, at the age of 26, Buffett started his own investment partnership, with a total capital of $105,000. Over the course of the next 2 decades, he achieved an average annual return of 29.5%, far outpacing the returns of the broader market. One of Buffett's earliest successful investments was in the company Berkshire Hathaway, which he took control of in 1965. Initially, the company was a textile manufacturer, but Buffett saw potential in its underlying assets and began to use it as an investment vehicle for his partnership. He gradually shifted the company's focus away from textiles and into other industries, such as insurance, banking, and retail. Under Buffett's leadership, Berkshire Hathaway grew into a multinational conglomerate with a market capitalization of over $500 billion as of 2021. Buffett's success also stems from his discipline in sticking to his investment philosophy and avoiding the pitfalls of market speculation and short-term thinking. He is known for his patient, long-term approach to investing, focusing on companies with strong fundamentals, sustainable competitive advantages, and management teams with a proven track record. His investment decisions are also guided by a strong sense of ethics and a commitment to shareholder value. One of the key tenets of Buffett's investing strategy is his focus on value investing. This means that he looks for stocks that are undervalued by the market, but have strong fundamentals and the potential for long-term growth. He avoids speculation and short-term thinking, instead taking a patient, long-term approach to investing. Another important aspect of Buffett's investing strategy is his focus on buying great companies at a fair price. He looks for companies with strong competitive advantages, such as a well-known brand, loyal customer base, or unique technology. He then buys shares in these companies when they are trading at a reasonable price, based on his assessment of their intrinsic value. Buffett also places a great emphasis on the management teams of the companies he invests in. He looks for management teams that are competent, ethical, and have a proven track record of success. He believes that a great company with a mediocre management team will not reach its full potential and will ultimately underperform in the long run. Another key aspect of Buffett's investing strategy is his focus on diversification. While he does have some concentrated holdings in certain companies, he also spreads his investments across a variety of industries and sectors. This helps to reduce the risk of his portfolio and provides some protection against downturns in any one particular area of the market. Warren Buffett looks for companies that have a strong competitive advantage, a proven track record of success, and a stable, predictable business model. Some of the companies in his portfolio that reflect this philosophy include Coca-Cola, American Express, and Apple. Coca-Cola is one of Buffett's largest holdings, and he has owned shares of the company for decades. He likes Coca-Cola because it has a dominant position in the beverage industry and generates strong cash flows, which it uses to pay dividends and buy back shares. American Express is another company that Buffett has owned for many years. He likes the company's brand strength, customer loyalty, and high barriers to entry in the credit card industry. More recently, Buffett has also invested heavily in technology stocks, such as Apple and Amazon. While these companies may seem outside of his traditional investment style, he sees them as having similar characteristics to his other holdings. For example, Apple has a strong brand, loyal customer base, and a predictable business model, making it a good long-term investment. Another key element of Buffett's investment strategy is his focus on buying stocks at a discount to their intrinsic value. He looks for companies that are undervalued by the market, but have strong fundamentals and the potential for long-term growth. He is also willing to hold on to stocks for long periods of time, even if they are not performing well in the short term. Following Warren Buffett's investment principles can be a formula for success and can help investors make a lot of money in the long run. These principles emphasize investing in strong, undervalued companies with competitive advantages, avoiding overpriced or risky stocks, and taking a long-term approach to investing. By sticking to these principles, investors can potentially benefit from consistent returns and the power of compounding over time. However, it's important to remember that investing always carries some level of risk, and it's essential to do your own research and consult with a financial advisor before making any investment decisions. Warren Buffett's Top 10 Investing Principles. Rule number 1: Look for companies with a strong track record of earnings and dividends. Buffett looks for companies that have a history of consistent earnings and a track record of paying dividends to shareholders. Rule number 2: Invest in businesses that have a strong competitive advantage and are easy to understand. Buffett believes in investing in companies with a competitive edge, like a well-known brand or loyal customer base, and that operate in industries he understands. Rule number 3: Don't diversify too much. Instead, focus on a few companies that you understand well. Buffett advocates for investing in a small number of companies he understands well, rather than diversifying too much across a range of industries and companies. Rule number 4: Don't chase after short-term performance or try to time the market. Buffett believes in taking a long-term approach to investing and avoiding the temptation to chase short-term gains or try to time the market. Rule number 5: Be patient and take a long-term approach to investing. Buffett emphasizes the importance of being patient and taking a long-term approach to investing, rather than trying to make quick gains. Rule number 6: Avoid overpaying for a company's stock. It's important to have a margin of safety. Buffett believes in buying stocks at a discount to their intrinsic value, ensuring there is a margin of safety in the investment. Rule number 7: Look for undervalued companies with strong potential for growth. Buffett looks for undervalued companies with strong fundamentals and growth potential, rather than investing in popular, overvalued stocks. Rule number 8: Avoid companies with excessive debt or questionable accounting practices. Buffett avoids investing in companies with excessive debt or questionable accounting practices that could potentially harm the company's long-term prospects. Rule number 9: Pay attention to a company's management team and their track record. Buffett places great importance on the management team of a company and their track record of success. Rule number 10: Keep your fees and expenses low. They can eat into your returns over time. Buffett believes in keeping investment fees and expenses low, as they can significantly impact investment returns over time. Warren Buffett, one of the world's most successful investors, has several habits that have helped him achieve his success. First and foremost, he's an avid reader and spends a significant amount of time reading books and newspapers to keep up with the latest business and economic news. Buffett is also known for his frugal lifestyle, despite his massive wealth. He still lives in the same modest home he bought in 1958 and drives a modest car. Buffett also values his time and focuses on prioritizing his most important tasks, rather than wasting time on trivial matters. Another important habit of Buffett's is his discipline and patience when it comes to investing. He avoids chasing short-term gains and instead focuses on long-term value investing strategies. Finally, Buffett is known for his commitment to giving back and is pledged to donate the vast majority of his wealth to charitable causes. These habits have played a key role in his success and can serve as valuable lessons for anyone looking to achieve their own goals. In conclusion, Warren Buffett's stock holdings reflect his disciplined approach to value investing and his focus on long-term value creation. He looks for companies with strong fundamentals, stable business models, and a competitive advantage, and is willing to hold on to stocks for long periods of time. By following this strategy, Buffett has been able to consistently outperform the market and generate strong returns for his investors. Thank you for watching. Like and subscribe my channel for more videos.